All right, everybody. Today's episode is absolutely off the chain because we're talking about the front-end acquisition process. And George, I'm really excited to dive in and shed some light on this because it's so valuable to really set folks up for success.
I think today's episode is really about action. We talk about what it really takes, both analytically and from a mindset perspective, to be able to go out and submit LOIs, because that is the key thing to getting into the storage industry, is putting offers out there.
Listen to the whole episode because there is a little Easter egg at the end of it. We've got a little challenge for you guys. Make sure you listen all the way through and check out that challenge, and we'd love to hear from you after the fact. But let's dive in so you guys can get out there and take action. What is going on, everybody? Welcome back to the Self-Storage Income Podcast. You got George and I today hanging out together, talking all things self-storage, bringing some more just value here for everybody, wanting to learn more about storage, how to invest in it, how to run it, what we're seeing. So I'm excited. We've got an awesome episode going on today. But first and foremost, George, how the heck are you, man?
Con, I'm doing good, man. I'm excited to talk about today's episode. We got all things acquisitions, talking about finding deals in the process. I think it's going to be a really good conversation today to, hopefully help you listeners out here so you can get things moving.
What really spurred this conversation and this topic for the podcast today was I'd had a one-on-one recently with our folks that do, the one-on-one sessions with myself. And a lot of the questions were around this very beginning portion of the acquisition, and the timing of these certain elements of the acquisition on the front end. At what point are we submitting our interest and our letters of intent to the seller or the broker, and what are the different pieces and elements that we need to have set up and ready to go for those times, and even down to like, how confident do I need to be in the deal before submitting the LOI, and then that kind of drives into that side of the whole equation where what do you leave for the due diligence time frame versus like what's checking the boxes for you on the front end to make it, to make you confident enough to submit that offer, that LOI, and then, the PSA after that, the purchase and sale agreement. So first and foremost, I wanted to center around the front end process here. And caveat to this, I want to share like what we've seen and what we're hearing and what we've been through as far as these processes go. And like George, like we were talking about just before the podcast here, like all things, right? There's not just this linear path that just works every time exactly that same way. These are the things and the steps that we've seen. However, every deal, every broker, every seller could be totally different. They might not want to give you documents. They might want to have other steps in this process done before giving you, more and more insight or access to documents like bank statements or P&Ls or these other aspects that you're absolutely going to want to get your eyes on. But to that point, let's back up a little bit and let's kind of set the stage here. So let's say you're out there, I hope you're out there, and you're finding these markets that you want to invest in, that you've identified, there's some growth, population growth, economic drivers, these different things. There's some good storage demand. You've identified some solid markets, and now you're looking at some facilities there that you're interested in potentially buying. The whole problem of this on the one-on-one call that I had was I'm not moving fast enough. Like by the time I figure out and do all my analysis, the deal's already under contract, or there's something that's already happened, like I'm late. And so the question was, how do I move on these things more quickly? And that's where I think our quick deal analysis comes in. Check the high level boxes. If it works, you're submitting the LOI. But what are you typically seeing, talking to folks as well on, when they feel confident and comfortable enough to just say, you know what, I'm submitting the LOI and I'll look at all these other pieces during my due diligence time frame.
Yeah, this is really good, and it's a good topic because I think part of it is analytical and then part of it is mindset. On the analytical side, like I really encourage people to get your reps in, like practice underwrite deals that the people that I've seen be incredibly successful, whether they're podcast listeners or people in the industry or part of self-storage income, is they are underwriting deals that are smaller than they'd ever purchase and way larger than they ever purchase. One of my favorite examples is a long-term community member, Charles. He's like, I would underwrite $20 million deals and $200,000 deals. Mm-hmm. Yeah, I knew I was never going to buy those massive ones, but I wanted to understand how to value a property. And the reason doing that is then you want to get yourself primed in a position that when there is something that you would be interested in submitting an offer on, it doesn't, like, you're quick, you're ready. It what used to take you hours takes you minutes to do.
Exactly.
There are tools that you can use to do that. Like Connor mentioned, our quick deal analyzer. That is a fast spreadsheet where you just need a few metrics, as opposed to our more in-depth versions that have endless tabs and unit mix breakdowns and itemized expenses to it, which is like incredibly important, but maybe not needed for you to do your very first quick pass at a facility. Another thing too for like minimizing the time frame is buy box, like knowing what you're looking for and what you're not looking for, so that way you're narrowing down with understanding what you're going to even be willing to put time and energy on. And a lot of people think too, like your buy box is purely about location, which it can be, but other things to just simply like rule out is like, I don't want to do ground up developments, or I don't want to do heavy lease ups, or you do want to do that, or you don't want to do just like pure climate controlled buildings. So it's like understanding what situation you're in, what you have and what you don't have, something we like to say, whether that's capital, partners, whatever other resources, operational experience you have, to help you be like, what is even worth spending my time to do a deeper underwriting on? It's like that alone, doing that homework on your side will save you a ton of time.
Dude, yeah, I think a lot of times we have this idea of, I'm going to cast this huge net and I'll go anywhere and I'll do anything. And that, there's just going back to the whole Hormozy thing, like the riches and the niches thing. Like there's so much to be said about riches in the niches, focusing down on a certain type of facility, certain type of utilization, the business strategies, like you mentioned, lease up or stabilized, or, management value add or CapEx value add, like all these different things. It's so important. And I love that you talked about the mindset thing, and you might have had a couple things else you wanted to say. So you can tackle that, and then we can dive into some of that.
Yeah, so the mindset piece is like, I mean, everyone's talking about AI right now, right? And like I talk about this on our deal analysis calls. It's definitely impacting self-storage, but I think there's some really important things that AI cannot replace. You can use AI to underwrite your deal, to help you do market analysis, to look up demographic info. We even we utilize Tract IQ that allows you to use the MCP that all of our SSI members get access to, where you can literally put Tract IQ into Claude to underwrite deals. So like, we love AI, of course. What AI cannot replace is the emotional fear of submitting an offer to a broker and saying like, oh my gosh, I'm actually doing this. I hope I didn't get my underwriting way off. Even if you could use AI to submit the deal, it's not going to take away that fear of sending it to a broker and, feeling like you did something dumb and get rejected, or all of a sudden you get it accepted and now you're like on to the next step and you're like, oh crap, what do I do now?
Tiger by the tail, dude.
Yeah. And so that's why like we do these deal analysis calls or these one-on-one calls with Connor, because that itself is scary as well too. Like to show up to a call to be like, hey, I underwrote this deal because I want to practice and I'm afraid I want to make sure I didn't make some massive mistake in my spreadsheet. Or, hey Connor, I'm here for my one-on-one call and I did nothing the past 30 days. So I'm here to like kind of get things going. It's like, those are the things that we really think about. And as far as like the mindset piece, to be able to get yourself ready to actually take action on this, because you can look up deals on Crexy, you can analyze deals all day long, but you are not committing to actually buying a deal if you're not submitting an offer. And so that's a really big piece, to be like, am I actually ready to take the leap and send this out to a broker or seller?
Yep, exactly. That's been like one of the big focuses for us in those sessions, man, is like, all right, by like the third session, it's like, all right, before we meet next time, like you're going to submit X amount of LOIs.
Yeah.
So like it's such a big thing. And no, thanks so much for bringing that mindset piece up, because that was part of my discussion the other day on the one-on-one, because it's that focus on like, just do the numbers work? Like, does the actual deal work? Like with the knowns that you have, the underwriting, does it actually make sense? If it's yes, like go. If it's actually checking boxes for you, I mean, you can talk yourself out of any deal ever and find all the reasons in the world why there's this risk or that risk or whatever, because there's always going to be risk.
Yeah.
And at the end of the day, you just have to focus on, does this deal actually make sense? Does it hit the cash flow targets that I want? Does it service debt to the level it needs to? Does it fit with my business strategy, my long-term plans, that kind of stuff. So touching on that, I mean, we talked a little bit about that on that one-on-one I had. And then also talked about those metrics like early on, kind of go back to this quick deal analysis piece where, you're quickly deciding whether or not you want to dive further into something or get an offer, start drafting an offer. And I talked about a couple things, man, where I was like, if I'm just looking at something high level, I'm looking at cash flow, I'm looking at like the potential value add opportunity and, what that might look like. But I'm really just looking at cash flow and I'm looking at my debt service, depending on what kind of financing structure that's going to be in place. Am I doing an SBA at 9 or 10% or whatever it is right now? Or am I doing, a conventional loan? It's going to be more closer to 7%. I'm putting a huge, portion of money down. Or is it going to be seller finance? And am I going to try to, get a lower interest rate, maybe have a little higher sale price, whatever that might be. But really, I'm just looking at the current expense load. Does it service debt? Does it cash flow? Just like breaking it down into the most simplistic things. And, typically we like to see, George, what are we looking at? We're looking at maybe like a 35 to 40% expense ratio, let's say on average for most of these as we're underwriting initially, which I think is a very safe and conservative area to be. I don't know what
Yeah.
you guys are seeing.
Yeah, no, and I think a couple things, like we're recording this in June of 2026. So like if you're listening to this to 2 years from now, what Connor
Yeah.
said to interest rates might be different. So like
Yeah.
don't get hung up on that. But the point of what Connor's
Please be
saying,
lower. Please be
yeah,
lower.
the point what he's saying is solid because like it's really okay, is this bankable and what type of financing could this deal work? So most people who are listening to this probably aren't going to be buying facilities cash. You're going to be using some type of financing. Maybe if it's a smaller facility, you are doing cash or something, but generally speaking, most people are using financing. Let's say, okay, great. Are you using SBA loan, conventional loan, maybe seller financing? Those are all going to have different, packages that they come to, which each need their own different type of analysis. We actually just recently did a full podcast on self-storage analysis, so I would recommend you guys go listen to that one because we go much more into the weeds than we probably will here today. But when you break down every deal, they all have their own revenue, expenses, and ultimately your cash flow part of it that allows you to see like, okay, does this make sense on a simple level? Because you can, again, when we say quick deal, you can get all into the minutia of every single unit mix and the occupancy per different type and all the expenses. And of course, all that's important, but we're talking about like speed here in the beginning. And you just want to be able to say, like, does this make sense on a fundamental business underwriting? And so when we look at the expense ratio, like, yeah, we're looking at 35 to 40%. But if you are looking at lease ups, like that's a way different situation because you're going to have a huge vacancy and you're going to have to fill that in. And we were just doing one of these on my deal analysis called underwriting a lease up. And my biggest thing was like, this is going to be losing money when you buy it. So like it's like an expense ratio doesn't work. And that doesn't mean it's a bad thing. It's just how you look at one storage facility versus another. It doesn't always translate, the step by step for each one.
Well, and that's where the strategy comes into play where you're like, okay, well, it looks like I'm going to be negative. So to float operations, I'm going to need X amount of working capital tied into the loan or whatever that might be.
Exactly.
And, having those kinds of plans in place, dude, when you're going to the bank and you're breaking this stuff down, like that just shows that you know what you're doing. You're there to get deals done. You've done your research. You know what the process is, and shows them that you're lendable.
Yeah.
They can give, potentially, invest in you to go and acquire this property. Obviously, if the property is good and all those things. But good to have your ducks in a row, man.
It's true what you're saying too about being a lendable because you want to be able to give the bank confidence that you know how to operate this facility. Like they're loaning money on the asset, but in a lot of ways they're investing in you. They're saying that, hey, we're choosing to lend our money to you so that way you can then make us back more money off of interest. So like it's really bank like the best banks look at it as a partnership because they're trusting you to execute on it. And so like
Hmm.
if you can show that you've thought of these things as opposed to a bank coming back and asking you questions and you're like, I don't know. Like the more you can show that you've really thought through this, it's going to be, really, really helpful when it comes to actually getting that loan approved.
Well, and the fact of the matter is too that these banks and these folks that are at the banks typically have no idea how these businesses actually operate. They're strictly looking at numbers and they're looking at ratios and they're saying yes and no based on the information they have. But at the end of the day, yeah, the last thing the bank wants is to have to, repossess a storage facility and foreclose or whatever, and have this asset that they have to try to maintain for however long before they can sell it or whatever the case might be. So yeah, I mean, the more information and the more prepared that you can be for them and help guide them through that. Like they're not there to like guide you and say yes or no. Like you're there to guide them to get the yes, to show them why it's a worthwhile investment, and therefore it shows to them that you are the one to invest in. So no, all amazing things, and want to just like reiterate too. You brought up a great point, George, about getting the reps in on the underwriting side and just that initial high level, whether it's the in-depth or the initial high level, either one, but just getting the repetitions in understanding what a great market looks like and what a good facility or potential opportunity looks like. Those things will come with time, and keep it like, just again was like another part of the conversation the other day where it was like, yeah, you might have looked at 2 or 3 deals. Like, okay, now like, look at 30, look at
Yeah.
50. And then once you start looking at a high volume of these, you're really going to start understanding what looks good, what doesn't. There's going to be those indicators that help guide those decisions for you a lot faster versus, obviously you're going to fumble through it the first few times. So
Yeah.
don't get discouraged.
Yeah, I mean, I keep bringing up the deal analysis call because I just got off of it, so it's just top of mind for me. But like every
Yeah.
single time we start the call with the community, I'm like, guys, use this form. And if you're actually thinking about submitting an offer, great. But if you just want to practice, like still use it. Like submit this deal and say, I don't know what I'm doing, so I'm just trying to practice and like let's go through it because it is going to be tedious and you're going to get things wrong in the beginning. And like you can do this on your own. So like just because you're not part of a community, by all means, like you can still go out and practice underwriting deals. But it's just one of those things that like Connor's saying, like you just have to continue to keep going, and then you can practice doing the quick deal. You can practice going more in depth, but like every time you do one, even if you don't move forward on that deal, you're going to get better and you're going to understand value and risk and the different opportunities that come with, the different market that you're in. If you're dealing with REITs in your area and what that means for how you're going to have to compete on your marketing. But every time that and then when you get to submitting offers, every time you get a no or a rejection, it's just going to make you better for the next one. And so like, I think people get so hung up on this one deal that then what happens is what you said, Connor, is that they get so paralyzed that then the deal goes under contract with somebody else and they didn't actually do anything with it, which is
Yeah.
okay. Like that happens like that, but then you just move on. Like, so
Pro tip here, if you guys are out there and you're looking at potential opportunities and it gets under contract and you're like, shoot, like I missed it. Do not give up. Like, don't give up on that specific deal because they fall in and out of contract all the time. Make sure that you keep in contact with the broker, the seller, keep the pulse on any of those opportunities that you've identified that would work well for you. Because man, we've heard so many stories about folks that has happened to where it's like, shoot, like I lost it, got under contract, it's gone. And then, 6 months later, they find out that it fell out of contract and then actually sold to somebody else in that time frame. And they had no idea because they weren't following up. So little pro tip there.
Lots of people are out trying to buy facilities, small ones that range everywhere from $300,000 to $4 or $5 million. They're worried about getting the money or having the financing. This is why we team up with Live Oak Bank, because they get this. They understand storage. We have them help us underwrite deals for our students and others. They are one of the best people in the industry when it comes to getting loans, especially small business loans. They can actually help the customers when they find the asset, understanding how much debt can I get? What's it going to look like? That changes them from being a bank to being a real asset to the customer. We recommend Live Oak Bank to our students as well as others that are trying to get into the storage business. They have an in-depth knowledge of this asset class. It's more than a bank. It's more than simply getting money. They're actually an asset and a partner to them, helping them go through all the things that they don't know and understand.
One of the things I wanted to touch on here too was kind of the timing of some of this stuff, because we're talking about doing this high level analysis and getting an LOI. That whole speed to lead concept is such an important thing. Whether we're filling up facilities or we're selling products or we're going after these investment opportunities, self storage, it's really important. The speed aspect to it. So if you go through your quick deal analysis and you get to whatever point that you feel comfortable and confident enough in the numbers where, debt looks good, coverage, all this stuff, the cash flow looks all right, the market seems to be growing, all these things, like get the LOI out. And part of my conversation the other day was I have no hesitation whatsoever to submit the LOI, and depending on how interested I am in that potential opportunity, if I'm like, dude, this thing is freaking fire, I will straight up say like, hey, here's the LOI. And also, you should at this point, you've probably already signed like an NDA of some kind with the broker or the seller or something like that to get the information in the first place. Whether that was an OM or you've signed up on the brokerage's website or whatever, they'll typically have you sign an NDA before they send you these other details about a potential opportunity, these listings that they've got. So you might have that done already, but let's say you're going direct to a seller. Or direct to an owner, and you're not working through a broker and there's not that process in place. And if you haven't signed an NDA yet, even with a broker or any of that kind of stuff, what I like to do is just send a template NDA that says, hey, like, just so you guys, I'll essentially tell them like, just to make sure that you guys know, we're serious and we want to make sure that your information's protected and, reassure you that everything's going to remain confidential. Here's our NDA, already got this signed, ready to go for you. Here's the LOI. So just a little like rabbit hole on the NDA side, just to again show people that you're professional and like you're here to do business. Like you're not here to just have them guide you and throw you around. Like you're taking the lead on things and you're ready to execute. That said, when you submit the LOI, I would have no issue saying, hey, here's my LOI. On top of that, I really want to make sure, and I always like to frame things in the way that like everything we're doing is like for them. Like it's not, has nothing to do for me, nothing like that. It's like, I'm here to take care of them and solve a problem for them of like selling their facility because they're clearly interested. So it's this framing of, hey, just so we can get you taken care of, start the ball, get the ball rolling, whatever it is, start working through things as quickly as possible. What I like to do is just straight up ask for financials, all like with the LOI. Again, if I'm submitting the LOI and I'm kind of like, I'm on the fence, I've got some like due diligence stuff I really need to look at before, and get into the PSA and all these other things before I ask for those documents, like granted, do it by all means. But the sooner that you can get that information to you, if you can get P&Ls, if you can get balance sheets, if you can start doing some of that more in-depth analysis, the quicker you can go and the quicker you can get information to the bank and the quicker that you can get it to the lender or your partners or whoever, and the quicker you can make decisions and the quicker that you can, secure the financing and have the conversations with contractors or whatever it is that you need to do. And the faster you can just move and solidify your underwriting. So as soon as possible, get that information from the sellers, from the broker, and start working through that. But again, caveat, it's not going to be that case every time. Because George, like, do you want to share kind of like what you talked about just before the podcast here?
Yeah, for sure. So, I mean, what was happening on our side is I was helping someone work through their deal and they didn't want to send anything until an LOI was submitted. And so like, sometimes you'll go onto a website with a broker and they'll have everything there for you in a nice Dropbox folder or Google Drive or whatever, and you can go and get all of the financials, the rent rolls and everything. And sometimes you don't even have to sign anything. You just go to the website, they'll share it with you and you can do a full deep analysis with that. The issue that was happening was this member was like, hey, I want to do a deeper analysis, but I really only have like the revenue. They've told me the NOI, but I don't have like the P&Ls or anything like that. I think what's important then is, Connor, you're talking all about the LOI and what it does for you. And I think it's important for new people to understand like what actually is an LOI or a letter of intent. Because I know a lot of people if you're in residential, you don't necessarily have that. You just go right to an agreement. And so when we look at your LOI, it is a tool. It's honestly not even a requirement. Like you don't actually need an LOI to buy a storage facility. You can go right to a PSA. But the LOI is a non-binding agreement that allows you to show that like, hey, you're serious enough to submit something with your signature on it that you're wanting to pursue this deal, as opposed to, just wasting time with emails back and forth and asking questions. And then the broker seller's like, this person's never actually going to submit an offer or is serious about this. And so how this member and I were working together on this deal, I was like, the LOI for you then is a tool to be able to be like, hey, based on what you've given me, here's how I would value this property and here's my offer, but I'm going to need more in-depth information to get an actual number to you. And so like the numbers that she had was revenue and the net operating income. And I'm like, okay, well, you can reverse engineer the expenses out of that. If you just take the NOI and subtract the revenue, that should leave your expenses left over, but that's still not enough to like buy a facility on. But so yeah, then it's like understanding, okay, what do I have? How much how like juicy is this deal to me that it is worth it to me to move forward even without all this information. And then, yeah, submitting an LOI with the sake of knowing that I'm not legally binding myself under a purchase and sale agreement. This is just showing intent. So that way I can move this forward.
Yep. No, that's golden, man. And thanks for sharing that like insight on what the LOI is. Because in addition to those benefits that you talked about, of showing that intent, it's outlining exactly how you're looking at this deal and putting it in front of them. So it's outlining, your proposed purchase price. It's outlining how you're going to finance it. It's outlining, some time frames. It's honestly maybe a couple page document. It's not some crazy huge thing. It's not like a 40-page purchase and sale agreement. It's a couple pages that says, hey, here are the details, like high level of what I believe this is going to potentially look like. And, there might be some negotiating on those pieces, which is good because you want the negotiation up front. So when you get to the purchase and sale agreement, all you have to do is provide that LOI that's finalized between you and the seller, provide that to your legal counsel, and they draft the PSA exactly to the T as far as what was agreed to in that LOI. And that's going to save you a ton of fees on the back end for the legal side of things because that gets spendy really fast.
Yeah, no, that's where it really becomes a tool to you and the seller in multiple ways. It's like, okay, here we're gonna have this business conversation now, and then trust the professionals to do the legal stuff that needs to be done. But yeah, it's and that's where it's like, do you like technically have to have an LOI? No, but it can save you a tremendous amount of time and energy in having that initial conversation with something in writing. So that way, yeah, because like the other part of an LOI is it shows like this property is listed at $2 million, but my LOI is submitted at 1.4 million. And so then like Connor's saying, like then there's the opportunity for negotiating. And this isn't even something that we say, but the brokers that we work with and come on and educate our community and have been on the podcast they're saying now, like, hey, in this market, like submit your offers. Like if you've underwrote the deal and you have a price that you like, send that offer in because it helps them set the market. And so I think that's, I think of Connor, the person you were talking to on your one-on-one call, or other people who are like, I don't feel ready to submit an LOI. Like brokers are even saying in this market, send your offers out because it helps set the expectations for the sellers. The amount of times that we will present or we'll have brokers present a deal and it's listed at this price and then no one submits an offer and then it comes back and is actually transacts and sells for 30%, 40% less. It happens quite frequently. And so it's like, I think people then go back and they're like, well, had I known it was going to sell at that price, then I would have made an offer. And so that's where it's like, use the LOI as a tool to see, like the worst thing that's going to happen is they say no. And then from there, they might counter or they say yes. and then you go from there.
Yeah. Imagine you get that response. Like, yeah, we're going to entertain it. Like, let's do it. That's an amazing day. So it's something else to keep in mind here is we're talking about, let's say I'm looking at a potential storage acquisition here. Like if I was going to use or planning to use SBA or conventional, how would I know what my debt service was going to be or what the bank expected of me or any of these other things? And so it's really, really important because goes hand in hand as well with, we're talking about sending the LOI to your legal counsel and these other things. You should go out there and have those people built and those foundations ready to go. Again, that speed to lead situation. Have an attorney that you're comfortable with, that you've met with, that you've talked to about your goals and aspirations. They specialize in real estate contract law, whatever it is that you need to go through this process, and make sure that you're going and talking to banks. So you're talking to debt brokers, you're talking to credit unions, whoever you plan on utilizing, and have those people in your pocket ready to go. So when these opportunities come, you've had the conversation with the bank. You know exactly like, okay, well, like my SBA, my interest rate's going to be, the 5% plus, prime plus whatever. And it's going to be 9%. And unless you have already had those conversations with the bank, because who knows, they might be like, yeah, we're actually starting to require more down for this or for that reason. And again, banks are all different too, so it's not just going to be some blanket expectation across the board. But for you guys to be as prepared as possible, go out and get those wheels greased. Meet the debt brokers, meet the banks, credit unions, lenders. If you're planning on bringing on investors ever or partners, talk to folks. Like, be open about what you're doing and what you're planning to do. To where, if you're out at some event, in the self-storage industry and you're talking about, hey, yeah, I'm looking to partner with folks, and I almost could guarantee that you're going to find other people that are interested in doing those same things. And it just, again, there's just so much opportunity and connectivity. So don't be shy about who you are and what you're doing, and what your plans are. But all said and done, I wanted to throw that out there where, we're kind of assuming and talking about a lot of these things that you have those pieces in place. So go get those pieces in place.
Yeah. Well, and I think too, that's where it's like, you can do all that yourself. You can go and build banking relationships. You can find your own debt broker. You can find other types of lenders, investors, partners. You can find all of those things. And that's, if that's your mindset, like, great, do it. I think one of the things of why we created self-storage income in the community is that some people are like, I want to get into storage, but there's so many steps and I don't want to have to do all those things. And so that's why, like, we bring on our lenders and our debt broker and different attorneys in the industry to share their expertise and guidance. So that way it can, help you guys not have to go and do all that yourself. There's this idea of like, are you going to invest all of your time and energy into something? Or are you looking to, leverage your time and be able to have a faster way to make these connections? And so I think that's just an important thing to think about too, is like, if you like, are you committed to getting into the industry? Because then it's like, we say this so much on other calls, like, self-storage is not passive. It is not a get-rich-quick scheme. Like, it is a business. There are things that you need to do to be able to run this right. And if you do it well, you can, we've seen people make a lot of money and really change their lives by getting into the industry. But it starts with a decision of like, am I ready to take the steps to do that? And then, either you can go out on your own and do it, or you can use the resources here on the podcast and the things that we share to help you guys to save you guys on the mistakes that we've made ourselves, so you guys don't have to make them, and then use that as an opportunity to really have a launching pad to keep going with this. But to bring that back to what Connor is saying, like, this is a relationship business, and you're not going to go and do all of these things yourself. You need to be finding lenders, finding a debt broker, working with an attorney for your legal counsel, so you can really get this dialed in for buying your first deal.
Yeah. And if you wanted to even go above and beyond, start talking to and getting demos from property management system software companies and all those things, and getting pricing from those folks, like really diving into each element of what it's really going to look like and cost for you to run a storage facility, acquire storage facilities. And man, I was smiling because I was thinking of, as you were talking about those things and having this community and these resources, the podcast and all this stuff. It's always amazing because we were talking about this at our Inner Circle event a couple weeks ago, and AJ had mentioned, he's like, man, after this event, you guys you have so much more knowledge and are so far more prepared than I ever was,
Yeah.
even after I had owned storage for however long, right? And so you guys have more information. I mean, and just thinking about that between the podcast and the book, that AJ's got, like all these, I mean, YouTube, everything that's out there here. Man, you guys are so far ahead of so many of these folks that got started, decades ago. Yeah, there's a lot of things that have changed in the industry, and there's always those changes, but fundamentally, things are relatively similar. And you just have so much resources and opportunity to go out and utilize those resources to like George's point, to truly change your life, to build wealth, and to do the things you've always wanted to do and build a great business. So no, that was good stuff, and it's always interesting to think like, man, yeah, we do have so much more information that is in all aspects.
Well, and think too, like to bring this back to the beginning of the call of like, Connor, you saying someone on your one-on-one call saying like, hey, what are the steps to this? Like, when should I be submitting offers? Like, yes, there's so much more information than there was when AJ got started in the early 2000s, but information can also slow you down. So like you don't have to go and read all 400 pages, listen to like we have 300 podcast episodes. You don't have to listen to every single one of them. Like there's a certain point where that education has diminishing value and you just have to keep going and taking the action to it. And so could you get every single relationship set up before you submit an LOI? Yes. But we've definitely seen people where they're like, I'm going to underwrite deals, I'm going to submit an offer, and I'm going to figure these things out as I go. And that's okay too. And ultimately that comes back to, when you think about your buy box, also think about like your own risk tolerance. Like, do you need to have every single thing dialed in before, or are you like, hey, I'm an entrepreneur, I get it, I'm just going to figure these pieces out and trust that, when I need more information, I'll go learn it, and then I'll keep going, and then I'll find the next piece as I need it. So like both can work. But I think that when you go back to the information can backfire if you just feel like you're constantly in learning mode and never allow yourself to actually take the action.
Yep. No, exactly, man. No, you've got to get out there and actually go through it and do it. And no matter, again, because so many of these are different, right? Like every deal is different, every seller, every broker, every scenario. And you're not going to have all the answers, and you're going to have to just go and I use this analogy a lot where you're not going to have the answers until you get to certain steps, right? Because I think we as humans, we want to try to survive everything, right? Like our survival instincts. We don't want to die in any way, financially or physically or any of that. We want to try to protect ourselves, and we have this sometimes unrealistic expectation that we're going to have all of this information, and then we're going to be able to make the decision. But there's always a little bit more that we don't have, and always a little bit more. And I think that's kind of the pitfall that we fall into. And we can't expect to have like the information all the way at the end of the road when, when that road is pitch black and it's dark, and we're all the way at the beginning of the road, and our lights can only shine so far ahead. Like we can only see so far ahead of us. And the most important thing is, whether it's the learning side of things or it's going through these deal processes and acquisitions, it's just shining that light in front of you and seeing, with the information you do have, what are the, calculated and educated steps that you can take next. Okay, take those steps, and then you can see a little bit further in front of you. Okay, now what steps make the most sense? Okay, I'm going to go this direction. Shine light in front of you, take those steps, and actually go through the process, because, again, you're not going to have that information to make decisions on until you're there.
When people think of, the scariness of doing this and putting yourself out there to get into self-storage, it's easy to see the cost of making a mistake. Like, oh my gosh, I bought this thing that I never should have bought, or I spent all this money on due diligence just to walk away. And I spent thousands of dollars and months of travel through all of this. But what's harder to put a number on is the cost of inaction, and just like, I'm going to keep learning and not taking the steps to, maybe you keep saying no to deals because you're looking for something that's like a pure home run. And you just think like, I'm only going to buy the perfect deal, when in reality, the people who've been through it know that no perfect deal exists. There always have, nuances and issues with them, and you make a calculated risk and go with it. And then the other cost of inaction is, You just simply just leaving your money in the bank and just having it diminish in value through inflation. So these are things to think about. Like we're not saying, hey, go out and be reckless and just buy things to buy things. Like our goal isn't for you to buy a storage facility. Our goal is for you to build wealth and freedom. That's like we say that all the time. But doing nothing has a cost associated with it as well too, and that's something that you need to factor in as you're learning without actually taking the initiation to submit offers and put yourself out there.
With this, man, I'm going to challenge everybody. If you've listened this far in the podcast, congratulations, like phenomenal work. You guys are crushing it. I'm challenging all of you listening to this right now to, over the next 2 weeks, analyze at least, let's say 10 deals, like analyze 10 storage facilities, and over the next month, get at least 5 offers out. Get some LOIs out to folks and see what can happen, see what conversations take place, and start getting the ball moving for yourself. Right now is an amazing opportunity for both on-market and off-market self-storage acquisitions. And to George's point, if you sleep on these opportunities, they'll never be there again. You can never invest in that opportunity, and it very well could, maybe you could have bought a facility that ended up having a valuation 10 years from now of, I don't know, let's just throw a number out there. Like maybe it's a $5 million valuation and an exit on this one storage facility. And you could have netted millions of dollars, but you never did because you didn't take the steps just to submit an LOI because it was scary or because this or that, whatever reason. Go through, take the steps, take action, and would love to hear any feedback that you guys have after doing those things in the comments here on YouTube or whatever it is that you're watching or listening on.
And remember too, like AJ said this throughout the years, it'll always be scary. Like interest rates are high right now. If they drop, then there's going to be more buyers that come into it. Like there'll always be a reason for fear to push back on it. So yeah, I love the challenge. I would love to see people who are listening. Maybe some of you have been listening for months and you've been a passive listener, and that's great. We appreciate you. And now it's like, let's take the next step and start underwriting deals. And maybe you're out there submitting an offer, and tell us in the comments. We would love to see it. We love hearing from you guys. It's fun for us checking it on YouTube, seeing you guys engage with us, and then helps us with new ideas for future topics on other calls as well too.
Heck yeah. Well, George, man, great episode today. Thanks so much for your time, and everybody, thanks for listening. We'll catch you all on the next one.